In less than 2 weeks, the Modi government will announce its final budget for this term. Technically, it's a vote on account, but indications are the government may still make a match of it. Every year before the budget, CNBC TV 18 brings you a bunch of the top fund managers in our series, What the World Wants from India. We kickstart this series with one of the most seasoned India watchers, Lucy Macdonald, Portfolio Manager and Chief Investment Officer, Global Equities with Allianz Global Investors. Lucy, thank you very much indeed for joining us. I want to straight away delve into India, but since you have a global perspective, first that. Will this be a good year for global equities, and how will it be for emerging markets?
We're imagining a year of relatively flat returns, but more volatility. And that's really what our expectation was for last year. And the reason why we're thinking that is because we are starting off with liquidity being drained from the system because of rising interest rates and also QE. And also that growth will be slower this year because we're coming off a year when you've had very strong earnings growth in the US. And then also, although we've had some derating in valuations, they're still at the high end of history. So overall, that suggests to us you're going to get quite a flat year. Within that, emerging markets look to have a bit more potential upside, we think. Okay. And India has been a bit of a bastion of stability over the last year. So that's the overall picture we're looking for.
Okay, India, bastion of stability. The earnings have not really delivered. Will that be a showstopper, or do you think that this year the earnings will indeed deliver?
It looks as if the probability is higher that the earnings in India deliver this year, and particularly with the financial sector, looks like that could be a source of upside this year and into next. So in a relative sense, where we're seeing earnings downward revisions elsewhere in the world, it could look better placed.
Okay. Well, since you start with financials, let me get to the budget itself. Do you really watch out? Will you watch out for this budget very seriously? There is a lot of noise that there will be, populist giveaways before the big general election.
Yes, I think it's the election which is really the focus for foreign investors, and the budget, clearly is going to be in the run-up to that, and likely to be a boost because of that. But it's really the outcome of the election which is going to be of interest.
Oh, really? Will it make a big difference if there is a non-NDA government, a non-BJP government?
Well, it may not make a big difference to the overall growth picture over the medium term. That tends to be, pretty well, set by the fiscal settings and the monetary environment. But that it does affect the rating that foreign investors are prepared to put on the earnings. There is definitely a perception that a stronger government is going to help more with reform and continue the strong growth that's been seen in India.
So clearly, as a stock market investor, you would want the BJP government to return with at least a majority, even if not a similar majority.
I think on balance, investors and commentators tend to prefer, a cleaner and stronger government.
Okay. Okay. Well, before I get to the elections itself, how crucial is the budget? If it had a large farm giveaway, will that, a large farm package, will that worry you? Will it stop you from making any investments for a bit?
No, I mean, the assumption is going to be that there will be fiscal loosening, ahead of the election. That's normally the case. It would be surprising if it wasn't.
Okay, okay. Well, in the meanwhile, at the moment, you said that, earnings may finally deliver now. What are you incrementally buying or interested in India? Well,
the financials I mentioned should be in a better place as far as credit cycle and provisioning is concerned. That's one area. And then technology. So within technology, there's still quite good, strong demand for services, for digital transformation services. All of that is very helpful for the sector. Against that, there could be some more concerns about margin because of visa issues in the US. But I think the overall, backdrop is still quite strong for those services, and it's structural growth.
Okay, but I'm more interested in financials. Which part of financials do you like? Like everyone, you just like the private retail banks?
Yes, I mean, it does look as if the banks themselves, could be, because of that provisioning and credit cycle, could definitely have a better earnings trajectory over the next 2 years.
Okay. No, but what about the non-banks? I mean, they went through a bad patch late last year. Some of them seem to have emerged out of it. Are there pickings there?
There probably are. There's still quite good structural growth in asset management, wealth management. So fee-based services is going to be a good growth area, we think.
Okay. And when you say wealth managers, would you also include other things like insurance companies, for instance?
Yes, and those fee-based, as I say, that seems to us to be where you can get some good stability and visibility of earnings.
Okay, okay. Well, let me move away from finance and infotech. It appeared that a nascent capex cycle has started when you looked at Larsen & Toubro's numbers last quarter. Does that space interest you?
Yes, over the medium term, the infrastructure is a good growth area. I think at the moment, the capex seems to be relatively stable. It's not accelerating, so it's not an obvious sort of cyclical place to be.
Mm-hmm. A couple of years back, or maybe 3 years back, pharma was the big one that we were watching. At the time of the 2015 Chinese yuan devaluation and all that chaos, pharma stood out, but it has since only fallen. Anything in that fallen angel space?
I think it's always an interesting area. Regulation and price regulation for pharma, I think everywhere in the world is an issue.
Yes.
And that obviously then goes down the line to generics. So within pharma, it really, we have to focus globally on really innovative areas. That's the only place where you're going to get pricing power.
Anything outside this space? I mean, pizza suppliers or specialty restaurants or, clothing makers, branded clothing makers like Page Industries or Avenue Supermart that saw such fancy valuations. What is it in the mid-cap space that interests you?
Well, we don't really look too much into mid-cap in India. Being global investors, we have very concentrated portfolios globally. So within India, we won't really be going down that deep as global investors.
What are you expecting on the interest rate front? Do you think that the Reserve Bank has room to cut rates because inflation has fallen? Or do you think it'll just worry about the fisc and so interest rate is not a big game to play now? Well,
the overall picture for inflation, the core inflation is around 4. Headline is lower than that, so it looks as if there could be scope to cut, but really that core inflation is what matters. So I don't think there's a huge amount of scope to cut. And really the fact that the oil price has been weak has helped with that. Yes. And helped keep inflation lower than it would otherwise have been. So I don't think there's a huge scope for cutting.
Okay, and a final question to you. What's the big risk out of India?
I think probably it is the potential for overheating. And so the risk that all investors have been focused on has been the change of leadership at the bank. The RBI, and I think that still seems to me to be the biggest risk. Underlying there's good structural growth. The political situation is relatively stable. The inflation picture is more or less under control. But that the risk seems to me of excessive monetary stimulus, because we've seen that happen in the past. But if that is kept under control, then I think the medium term looks pretty rosy.
Well, that's an important comment, saying that they're not terribly worried about earnings or about the structural growth story, but worried about the change of guard at the central bank and whether that could lead to overheating, excessive monetary stimulus. That's a warning which we should keep on board. Lucy Macdonald, it's always a pleasure speaking with you. Thank you very much for joining us on this first episode of What the World Wants from India.
Thank you very much.
We take a break, but thereafter, don't go away. We are getting yet another star fund manager, Julian Mayo of Fiera Capital, to speak about what he expects from India, from the Indian budget.